always thought the technology revolution was already moving fast. And then AI came and just put it on its head and said, now we're going to go warp speed. In lending, that is not necessarily a good thing. Fast decisions don't necessarily mean it's a great decision for the borrower. Hi, everyone. My name's Ali Oromchian. I'm the CEO of HR for Health, and I've got here Krystle Clark from Bank of America Practice Solutions. Welcome, Krystle.
Thank you for having me.
Of course.
I'm so nervous to be here.
There's nothing to be nervous about. I can't believe it's your first time, too.
It is.
Yeah, that's amazing. I've had a couple of first-timers recently. So yeah, I'm glad you're on here. Now, you've worked with hundreds of doctors, whether they were dentists, optometrists, veterinarians, ophthalmologists, physicians, from startups to acquisitions, multi-office. What drew you to healthcare?
An accident.
Really? Tell me about it.
An accident. So I grew up in Ohio and wanted to be a doctor and ended up finding a home at Practice Solutions instead of medical school. And
I love
if
that.
you know anything about our culture, it's one of those places where you're surrounded by great people. And it was a cool way just to, maybe not be in the healthcare field myself, but to help doctors with money.
And what's funny about that is I don't think people realize that the mecca of dental healthcare lending is straight out of Ohio and Columbus, to be exact.
We're kind of all born and raised there.
Yeah. The coaching tree, that have come out of Joe DiNicola's, leadership is pretty incredible.
It is. One of my greatest accidents is being in the healthcare field.
Well, that's the kind of accident you want to be in. So I want to jump into what you do specifically because you've got a really unique role. And I don't want to say it's new, but it's new-ish because historically, at least in the emerging group space, what we've seen a ton of private equity investment, of course. We've seen a ton of SBA lending, for massive growth. But traditional lending, the way Bank of America is not doing it and a couple of other people are trying, is rather new. And so tell me what drew the bank into wanting to really explore this area.
Yeah, it's really the clients. I mean, the journey of the client was trending more in the direction that we were, always a leader in doing the first offices very, very well. And then second offices would happen. And then, third offices would get tougher. And I always say it, when I talk to clients, the easiest loan that a doctor's ever going to get is the first one.
Right.
And they look, they just look financially more simple. So as their ecosystem starts to get more complex, there's more things for them to send to the lender and the expectations get higher because, as you're evolving in your ownership, there's pieces to the puzzle that need to be in place for, a bank's risk appetite to really support their growth. So we lost some clients, unfortunately, because either A, it was, too hard from their perspective, or B, we just didn't have the platform to really not just transact with them, but maintain that relationship post the loan. Mm-hmm. B of A has a ton of financial products out there and, some of the best, but if I'm going to give you my money and my deposits, right, there's an expectation for being able to lend. So we didn't want to lose those clients. Obviously, healthcare is kind of our strength and niche in lending for the bank. We do it very, very well. And so really building that platform for those clients and making sure that proactively we were giving them that guidance. So when they did, want to buy another practice or add another practice, they knew what they needed to look like. I always say it's an interview when I talk to new clients because you don't want to get into the dating process and have to break up because it is a lot of work for both parties. So really trying to understand, that nobody has a crystal ball, the 5-year picture, but where do you want to go? And is that something that our platform can support?
Yeah. Well, one thing that I think in the last 20 years that I've worked with Bank of America on behalf of our clients, one thing that I've noticed is that you really look at them as more than just a borrower.
Sure.
You're looking at them as a whole. And you're right. When they're first getting out of residency or school and they want to do their first office, it is a little bit easier, right? If they're doing a startup, you're looking at, how much, savings they have and can they handle, opening up their own office. If they're buying an office, you're looking at the cash flow of that. But how does that perception of the borrower change in the bank's view as they go from, let's say, 1 to 3, which I put that in one category, and then the emerging groups, and that go +3, right? They're like 4, 5, 6. Does that change?
Yeah, it's a lot less cookie cutter. And, there's some intake questions we can ask for someone who has 1 to 3, and we can go through that process in 10 minutes.
Right.
But, the more they have going on and just some of the curiosity questions, as to how their infrastructure is built, that's really what kind of sets those deals apart. And their corporate structures can be very different. Even their personal lives start to get more complex. The lifestyle may change, right? They may have other financial advisors or investment opportunities telling them, hey, let's look at real estate. So, or other business ventures. So to kind of go back to your question, it's very important that they have that dedicated underwriter relationship. And that's what is something that's different for us. Because it is frustrating when you have to explain certain things over and over again, especially once you're a client of ours. So we want to make sure that they have someone who knows, their behavior, their lifestyle, so that when those questions come up, they're more expected than out of the blue. It is a fun opportunity to be in this space right now because of how the market has really shifted. And you do see a lot more doctor-owned entrepreneurs with the resources that they need to be able to do it. And I think before, some of the ability to grow quickly, just there wasn't as much of the how do I do it.
Right.
It was just go do it.
Yeah. That's right. That's right. Oh, and I think that's part of the problem that was that the industry faced when money was cheap and the private equity groups were throwing money at them. A lot of practices grew without that foundational piece that needed to kind of keep everything very healthy. I think today we're seeing a little bit different practice growth, right? It's a little bit more intentional, a little bit more focused on the structure and the team and things of that nature that allows it to grow kind of effectively.
Yeah, and having that avatar, right? And I think a lot of the clients really gravitate toward a certain model.
Right.
And you can tell whether it's a legacy business and they took over their, father's practice and, their patients are sons and daughters and granddaughters of the patients that their dad was treating. So versus more of that systematic, hey, I see the EBITDA opportunity and I have more of that financial kind of mindset as to how I can put systems in place to grow top and bottom numbers to eventually, sell that off and
do something else.
Yeah, exactly. So
and if you're a borrower and you're listening to this and you want to stress out your underwriter, go invest in like a restaurant or a coffee shop or something.
Porta potties, landfills. I've seen it all. I've seen it all.
So let's talk a little bit about growth now. A lot of people at our conference are in this boat because we focus on the emerging groups, right? And so they've had success, they've grown their practices to a certain level, and now they're looking to make that next jump. Okay. Now, what do you look for? Whether it's balance sheet-wise, structure-wise, personality-wise, like what are those things that you as the banker are looking at and saying, this is someone that I think is going to be able to, if everything works out, take the next step, or this is a risky borrower, even though their financials may be great. But what are you looking at?
Yeah, we expect the financials
to look
work.
Good. Okay, good. Okay, all right.
We do. That. We're going to assume when we talk to a client that they have done some due diligence on themselves to know that they can borrow.
Fair enough. Okay.
Right? You don't start talking to a realtor to buy a big house unless you are ready for the payment, right? So hopefully that's the expectation when you start talking to any lender. But there is I would say like an initial handshake to an underwriter, and how complete your package is important. And it's not just, do you have the tax return sent from your your CPA or your in-house, is what's on your balance sheet accurate? It's accuracy. And it's, a lot of clients tell us that it's a lot of paperwork, but if a personal financial statement isn't readily available and updated every year, it's going to be difficult. Right. So we try to do a lot of, that onboarding diligence. To backtrack a little bit about your question, I think when we started coming to your show a couple of years ago, or at least me strategically, I wasn't even in the role yet. I was just there to learn, and I was just trying to understand what those pain points were. You should come to our session tomorrow. Yeah. But we do. We feel like the education isn't out there from the lenders to really go beyond kind of the surface level. This is what a P&L is. These are the benchmarks, to really start educating clients so they can come prepared. So that's what we're leading with right now, is just whether you work with a capital partner that's a private equity partner or a traditional lender or a local bank, you should have these things. So we go through, just balance sheets, and we go through organizational charts, infrastructure, who's going to be in all these different places, so that we can trust that the business will continue to run as big as, as it gets bigger.
Well, and I think you hit on something that is very unique actually to Bank of America, because it's something that I think Joe DiNicola put in place very early on, which is that not every customer is a yes customer. Yeah. And there's something unique about that, because it's very easy to say, as a lender, to say yes to everybody, but not really looking at the business side of it. And I think some of the harder conversations that you probably have is telling someone who has strong financials and things of that nature, hey, we don't think you're necessarily ready for lending from us right now, because maybe you're jumping around, right? We were talking about this last night. You're jumping around from startup to acquisition to a remodel, and or you don't have an idea about the business plan. It's not as fine tuned as you maybe would expect. And now, we all know, of course, in business, things change, right? And you got to be able to pivot. So, but that's not what you're saying. You're saying we need you to have a plan, and we need you to have a structure in place so that when we ask for financials, you're not putting it together for the first time.
Yeah, and we don't expect perfection. That's not the reality of any type of entrepreneurial business goal. But being realistic about, hey, there's some pain points. There's changes in insurance. We see it in medical a lot too, that they can pivot from a profitability, overnight. Absolutely. Sometimes for things outside of their control, staffing changes. We're talking about those capital investments that you have to make maybe at location 4, 5, or 6 because you want to get to 10.
That's right.
And so you're going to take a hit a little bit sooner. Maybe in your financials, your EBITDA might drop because you're making that. So that's not a growing pain, too late when you're at 9 and 10 and you really need that.
Yeah.
I think the impression that a client has from a relationship standpoint with any lender or financing partner is just that. Like, they have to be able to articulate their why and where they're trying to go. And if they have to bring some of the fun part I've seen with the evolution of some of these growing clients is that they're not afraid to say, I don't know.
Right.
So, and I think us helping them, they're leaning across the table saying, tell me, or what are you looking for? Show me what you're looking for. So they're craving that guidance. Yeah. And I think in combination with the right partners, whether that's their CPA or their attorneys or, even some consultants, equipment folks, just really making sure that they're getting that sound advice for what they're looking for.
Yeah, it sounds like that's someone that's coachable.
Yeah.
Right. And that, if someone is coachable like that, they're going to listen to their CPA. They're going to listen to their attorney. They're going to listen to the HR expert. They're going to listen to their banker and financial advisors, because those people have done it not once or twice, but they've done it maybe 100 times, 200 times. So there's things that they see that maybe that person doesn't see. And there's someone we know who's a client of ours who super successful, dentist. She an absolute rock star. Started with one, I actually bought the practice, started with one, built it up, and then very quickly went to 2, 3, 4, 5. And unfortunately, there's not a happy ending to it because she didn't set up her structure with her team, right? Everything was done the same way she was doing the first. And I think what happened was that suddenly everyone got nervous around her, right? The lenders got nervous, everybody got nervous. And what ended up happening, she had to retract and go back down to 3 just in order to kind of, set the foundation and then go from there. And now she's great again, but initially it was a very, very difficult moment to be able to grow your practice and then say, you know what, I got to take my foot off the gas.
Yeah. And we've seen the pause button.
Sure.
And we've used it. And, looking back sometimes in those moments of, hey, let's get these things in check again.
Yeah.
They always come out stronger.
Yeah.
But it's really hard in that moment, especially when you see an opportunity on the line for another location or that next move and you can't go. You can't go. And some of that preparedness, being prepared, right? Being prepared is knowing either whether it's capital lined up or resources lined up to do it. And the more confidence that, they can explain to others, hey, I'm ready to do this because I have a lending partner or I have, the right HR infrastructure to be able to go and hire and train people and build a culture and do those things the right way. It does make a difference. It does. And on the long, spectrum, most of our growth clients aren't going, at least for our appetite. And again, we have a risk governance board where every lender does. They have things and structures they're comfortable with, and kind of going deeper into that interview I was talking about earlier. When we sit down with our clients, we ask them to interview us, right? As much as we're interviewing them, but really understanding that question on what is that platform, those guidelines, because things do change. And that evolution of maybe your CPA that you had that, did your tax returns when you were associate, and it's been safe and comfortable, you may have to step out of that because a lender's requiring certain financials that CPA might not be able to prepare. So there are those definite, shift moments. And again, if clients have those aspirations, we try to give them those things proactively and early on so that at least they know it's coming.
Yeah. And let's talk about the products though you have. You don't right now have a product necessarily where somebody has to come to you every time they're wanting more money, right? Or is there a line of credit type scenario? Maybe it is that where they have to come back every time and ask for more. Like, how do you guys support a group that's growing?
Yeah. Well, it's funny you ask. It's like, I think, so the bank's a wonderful thing because we have access to, a commercial lending for 100 million plus, 100 million in revenue plus biz. So we have access to a lot of different products. So in the market, there was always the delayed draw term loans out there. And so we have a product that operates as, a growth line or, an equity line against your practice. Those clients that have access to those lines have been with us. We know they're, clients that are going to send us timely financials. They've kind of earned, that respect that they've done a couple transitions. They've kind of shown that they have the ability to, if the model is buy an underperforming practice and turn it around, or, maybe it's a certain demographic that they're going after. But once they've kind of proven that model and we understand their pace, that line of credit is it's a game changer because they can confidently get access to cash quicker to be able to do those things. Right. And it's less red tape on the process, which, every bank has a process and regulations, and sometimes those bumps, make things frustrating or slow things down. So that line opens up some of that.
And this is something I think you're hitting on that's really important, because I think sometimes people see the borrower or bank relationship as a one-time transaction, right? And what you're saying is, at least for this group, if you are planning on growing your practice, having that relationship and respecting that relationship and is an important part of it, because like you said, you don't necessarily need to have like all your products there, but if you have a relationship, it's a little bit better because you know the customer, you know what they're about. And if they suddenly want to buy real estate, then you go, okay, we've seen your history and we know what you're doing. And that goes into those decisions, I'm sure.
Yeah.
So.
And with all the industry partners that we work with, we kind of see that evolution, that expansion of relationships to where there's dedicated resources within the industry partners that support clients that have these, reaccessing. What's interesting about the clients that are reborrowing capital, though, is a lot of the time spent with them comes in between those, because we're trying to be proactive and make sure that, we can say yes quicker. Yeah. But also the clients, some of them just want to, wait for the right opportunity. Yeah. So, but it's been nice to work with, all of our folks out there that are helping the startup doctors and the acquisition doctors, and really when they identify one of those clients that just has that sparkle, that entrepreneurial sparkle, and says, hey, I want to get to more. Yeah. We can engage with them early and start preparing them for that. And if we take a client that, we've has already built some benchmarks and they're already at that evolution, evolving them into the commercial bank and some of these large, specifically in the dental and medical space, they can get up past 100 million in revenue pretty big. That's a bigger, more middle market type credit. Yeah. So, but the nice part is knowing that we can evolve with that client if that's where they want to go.
That's where they want to go. Yeah. And so today, obviously AI is taking a hold. It's moving super, super fast on a lot of things. Technology is moving faster than ever. Yeah. It's funny, you before this AI revolution, I always thought sort of the technology revolution was already moving fast, right? With all the cool things that we all have access to, that our phones can do and this and that. And then AI came and just put it on its head and said, now we're going to go warp speed. Now, in lending, right, that is not necessarily a good thing because a lot of times fast decisions don't necessarily mean it's a great decision for the borrower, right? Because I've seen approvals come in from some lenders who don't have healthcare experience, and they'll approve a borrower. And then you're like, wait a second, have they even looked at this, person the way, maybe they need to look at? But in terms of your world at B of A, how are you guys using technology to do what you're doing better or faster?
I mean, we've got electronic document signing. So
look at that. That's a big evolution.
Back when I started, it was a lot of pages on the printer and a fax machine. And, and I say that jokingly, but, of course. The technology piece in banking is super important to us, being relative for clients. Yeah. I think a lot of the diligence that takes place is still a very human encounter. Can an underwriting process get faster because technology can input, tax returns into a financial model? Sure. But the beauty of having a human underwriter there is, okay, we can talk through the trends and we can make sure that, in underwriting, there's a lot of things that just go beyond the numbers, especially looking at different benchmarks, especially looking at, where a client's projected cash flow is going to. So I think there's always opportunity for efficiency. These conferences, it's been so fun to meet partners that are, especially the speed in which clients now have access to information. They do. I was with a client and they just pulled their phone up and they were showing me their financials right on their phone. Yeah. So that's that live. Or you pop up a web page to do some diligence on your clients and they're like, would you like to schedule an appointment? You're getting that interaction through the client's eyes too. So, but I like to ask that question to clients and how really technology is, changing, how are they adapting to it? And a lot of clients are dependent upon the technology. Yeah, no, especially absolutely. As they scale. So.
Yeah, absolutely. And I think your role, at Bank of America before you went into this role where you were really evaluating a lot of these applications and a lot of these denials initially and helping people sort of overcome those by maybe tweaking their financials or tweaking, their application to make sure that the underwriters really understand fully who it is that's the borrower, I think puts you in a really unique place, Krystle, because you bring a special lens to the conversation where a lot of traditional lenders don't, and so I think that's unique. Well, this has been amazing. Yeah. So thank you for spending some time with me. I know you're super busy with your schedule, but for everyone who's listening, if you want Krystle's information, her and her partner, Nick's information are going to be in the description below so you can reach out to them. I know you're very generous with your time. So if anybody wants to talk to her, about sort of where you are and where you want to go, and whether traditional lending is the right approach or other options are. I know you guys will spend time with them.
Absolutely. Thanks for having us.
Thanks for coming.
Yeah,
Krystle.
thanks for your partnership.
Absolutely.
Take
Bye.
care.